Let's move right on. Our corporate voice of the day. And for now, we've got the management of Five Star Business to talk about their inline quarterly set of numbers. What's the growth roadmap? Let's understand from Srikanth Gopalakrishnan, the CFO at Five Star Business. Thank you for being with us. And let's start off with the numbers because they've been in line with what the street was penciling in. What about the rest of FY25? What are your projections on your NII, your disbursement growth? How will they shape up over the next year?
So first of all, thank you so much for having me again on the show. It's always a pleasure interacting with your viewers. Like you said, I think it's been a good quarter for us. Typical Q1, little muted as compared to the last quarter, but otherwise very, very typical Q1 numbers. We have delivered a good growth. The profitability has been good. The asset quality has held up really well. There's a little bit of increase in the software delinquencies, but that's expected of a typical first quarter, which always tends to be the most dullest of the lot. But from here onwards, I think we are very confident of achieving the guidance that we had given to the market of 30% plus growth. While we have achieved a 37% growth, year on year, our guidance to the market stands at about 30% plus, which is something we are confident about. Spreads are holding up really well. We are not seeing any issues from a borrowing perspective. In fact, during this quarter, we have managed to get IFC to subscribe to our debentures for 500 crores. There are other conversations in pipeline which are non-banks, which are capital market transactions and other DFIs, which are expected to convert in the next few quarters. So I think we will also be very good from a borrowing mix perspective. Spreads, like I said, will remain where they are. They will probably compress a little bit given the fact that we are expecting to pass on a little bit of benefit to our borrowers in the coming quarters. NIMs will compress a little bit given the leverage, but otherwise I think we are all set to deliver, pretty much similar to the numbers that we have delivered in Q1. I think you'll probably see a little bit of compression in NIMs and RoAs because of the leverage, but otherwise, from a growth perspective, asset quality, profitability, we are quite confident. I wouldn't use the word bullish in today's scenario, but we are very confident on that.
Liquidity, most of the NBFCs currently are experiencing the system is tight. So when you say that NIMs could be slightly under pressure, is that a function of liquidity or is that a function of higher interest rates which are not getting accepted?
Us borrowing more. So it is a function of us increasing the leverage. It's neither the fact that we will be constrained for liquidity, nor the fact that our cost of funds are expected to go up significantly. We are, in fact, if you compare last quarter to the current quarter, we have actually borrowed at a slightly lower cost of about 7-8 basis points lower than the last quarter. So we are not seeing any pressure from either the availability of debt or the cost of debt. But naturally, with our leverage going up, you will see some compression in NIMs because today the book is funded a lot more by equity. When it is funded by debt, obviously there'll be a compression in NIM. Nothing, no systemic risk, is being envisaged at this point of time.
In general, the slowdown in rural India seems to be getting over. When I say rural India, rural and semi-urban. I mean, a company like Colgate is saying sales have bottomed out. What does that mean for Five Star? Because you do have a strong presence in the, let's say, MSME, SME, the low loan ticket category.
See, our belief has always been, I think this is a question that has been asked to us more so in the last few months. Pre-COVID, the economy was very vibrant. During COVID, there was a sharp drop in incomes of people. People suffered both from a health and wealth perspective. Today, what we are seeing is that a large part of that has come back. It has come back to the extent, and during COVID, a lot of institutions, both banks and NBFCs, did have asset quality issues. But over the last few quarters, the results of banks and NBFCs have been really good. The asset quality has been improving quarter on quarter. So what we believe is that the cash flows have come back to the extent of their being able to service their debt, service their EMI repayments. Maybe discretionary spending is something that is probably left a little bit, which is why you are probably hearing the likes of the Hindustan Levers and the Colgates saying that their discretionary or the luxury spending is probably not to the mark that existed pre-COVID. For us, these are more essential services. So while a Dove soap of Hindustan Lever may not sell, but a Rexona or a Hammam has to sell because people have to take bath and there is a soap that is needed to take bath. So from that perspective, given that we are lending to essential services, we are actually not seeing any stress in demand or any compression in demand from our borrowers. We have managed to do almost close to similar disbursals of last year, which itself is of last quarter, which itself is an indicator that Q4, Q1, if the numbers are similar, I think it's a very strong sign that the growth is intact and we don't expect any pressure to come in the quarters to come.
Do you think growth could accelerate because of factors like monsoon, the fact that inflation base effect has kicked in? These were factors which were at play last time when you were lending. These were factors at play which in a sense impacted the demand. But now those factors which were headwinds will become tailwinds.
You're right. I think there are a lot more tailwinds today than headwinds, but we are also getting to hear more from the regulatory authorities and from market reports that there possibly could be a little bit of overheating with a lot of NBFCs and banks giving personal loans, giving short-term loans and all that. So given that scenario, I think if we have to grow, there is no dearth to growth. But being a conservative company, I would think that we would be a little more conservative and not want to accelerate the growth, even if there are a lot more tailwinds, because there probably are some headwinds which are hidden to the eye today and which regulators and market reports are sort of flagging about. So we will be a little gradual and measured in our growth for this financial year. What we have guided to the market will be 30+%. We don't see any issue in that. We will keep around that level for this year, and if we don't see the headwinds that are probably today being flagged off as possible headwinds to come, I think our ability to grow in the next few years, we can accelerate the growth in the coming years. This year, I think we will stay a little more focused and a little more gradual in our growth rather than accelerating the growth.
There were multiple exits by multiple players in last 2-3 quarters. Has that all got adjusted, digested? Especially what's happening on the Sequoia front?
I was expecting this question. We have.
You know me now. We've been friends for a while now. What to do?
These questions. This is the question. This is your favorite question. And see, first of all, again, let me clarify. Like I've been clarifying in the last few quarters, there have been no exits. It is only Matrix which has sold a large part of their holding. They still hold about 1.5%, primarily because of the fact that they were the earliest to come in. Their investment is almost a decade old. Sequoia still continues to be one of the largest shareholder, or I'll probably say the largest shareholder at this point of time. So it is just that there have been a couple of blocks that have happened. People have sold a portion of their holdings. At this point of time, there are no desperate sellers. There are no private equity firms who are wanting to sell in the market. If there is a good demand, I think the supply can be made available, but I don't think there is any desperation for people to sell, which will have an overhang on the stock.
Okay. All right. Really appreciate your time. Glad you could join us.